as we get ready for another busy economic week, we got to talk about what happened on Friday. Friday, we got another reading of PCE. We had a significant drop in the 10-year note with some yield inversion. And of course, we will talk about the next week ahead. Folks, if you didn't notice, on Friday, the 10-year note dropped to a current low of 4.2%. The 3-month Treasury is actually 4.3%. So yes, folks, we have yield curve inversion, the 3-month and 10-year. Just so you know, the 30-year note is currently trading at 4.48. So you could borrow at 3 months for 4.3 or go all the way out 30 years for roughly 4.5. Very, very interesting. Let's talk about the week ahead. We've got plenty of Fed speak and some key jobs numbers. On Monday, we have one Fed speaking. We get auto sales as well as ISM manufacturing. What is going on with the manufacturing sector and service sectors are very important. Tuesday, 2 Fed speeches, and we will see what happens with Mexico and Canada tariffs. Remember, March 4th is supposed to be when 25% tariffs go into effect with Canada and Mexico. My guess, my wild guess this Sunday morning, is that these tariffs will not go into effect, but we will see Mexico and Canada put on tariffs on China. Again, these Mexico and Canada tariffs are negotiation ploys. The first time was to get troops at the border. This second time is to get Mexico and Canada to put tariffs on China. That is just my wild guess. Wednesday, we get an ADP jobs report. Again, we want to know what's going on with jobs. Are we growing? Are we shrinking? Very important. We will get Fed Beige Book, which again is a report of the 18 Fed regions. And we will also get a flash of services PMI. Remember, I think it was last week, might have been the week before, services actually went negative. Yes, contraction. So it'll be important to find out. On Thursday, we will get weekly claims. Again, last week, remember, we got a yellow flag where we went to 242,000. Will we go back to 220? Or are we starting to take the stairs up and we will go from a yellow flag to a red flag? Then on Friday, we will get Friday jobs numbers for the month of February. This is a big deal. This is the most important number of the week. It is expected to be 160,000. Last month was 143,000. The unemployment rate is expected to go up from 4% to 4.1%. Sorry if you hear some background noise. We are currently in an active port and they are busy loading the ship. So if you hear any horns or whatnot, that is what's going on in the background. I am sorry. And then on Friday, we also get 4 Fed speeches. We did get a report from U.S. banks, and U.S. banks have a growth in bad or unrealized losses. Unrealized losses in the last 90 days went up $118 billion. The total now of unrealized losses is $482 billion. Let's call that $500 billion. We now have 66 banks on the problem list. That's actually down from 68 on the last reporting. What happened? Well, it's very simple. Mortgage rates spiked and the 10-year note went up, which lowers the value of assets on the bank's balance sheet. We did have one bank failure in January. It was actually a small bank, but fraud was expected culprit of that. In addition to that, folks, we did have a flash from GDP Now. If you don't know what GDP Now is, it is the most up-to-date metric on what is going on with Q1 GDP. It actually went negative. Yes, folks, it looks like US GDP is in contraction mode. It started the quarter at 3.9%, was most recently at 2.3%, now is showing a meaningful drop to 1.5%. This is reported by the Federal Reserve of Atlanta. This is very much a right now update as they capture more and more economic information. Consumers spent less than expected in the quarter, and exports were weak. This is showing a possible Q1 contraction. Again, remember, folks, last week I talked about the consumer being scared, the consumer not understanding tariffs, and when the consumer doesn't understand something, they stop. This is what I told you was coming, and it looks like we might have a significant drop in Q1 GDP. In fact, Mohammed El-Arian is saying this is a sobering report. Again, GDP now was forecasting 3.9, then 2.3, now a shocking adjustment to negative 1.5%. Commerce Department reported that personal spending fell 0.2% in January. It was estimated to grow 0.1%. If you adjust for inflation, if you go from nominal to real, spending was actually quite negative at 0.5%. Net exports fell 0.4%. Again, folks, this is not good news. Chief economist in RSM is saying the sense of complacency that has crept into the asset markets is about to be disrupted. Basically, folks are getting out of stocks, out of assets, into treasuries. This is another reason the 10-year treasury has gone from 4.8 to 4.2%. On Friday, we also got pending home sales. Pending home sales was a significant shock low. It came in down 4.6%. This is actually an all-time low for the report. This goes back to 2001. Again, folks, pending home sales for the month of January was a cycle low. The report has never, ever been this bad, all the way back to 2001. We did get the core PCE reading. As expected, came in at 2.6, down from 2.8. Headline came in at 2.5, was 2.6. Interestingly enough, U.S. Treasury Secretary Scott Bessent says that we could look back to inflation target pretty soon. We're going to get back to 2% very quickly. Also, Scott Bessent said the housing market is stuck right now, but it will unfreeze in weeks. That actually got me thinking, what does Scott Bessent know that you and I don't know? Is he simply saying that lower rates because of the 10-year note will create more bidding wars? Maybe. Does Scott Bessent think that the administration is working on some home loan products? Perhaps. Perhaps Scott Bessent is telling us there are some exciting things ahead for the housing market. I do not know. Let me know in the comments below. Lastly, we did get some updates from Fed President Goolsbee. Said that tariffs can take a long time to impact the economy. Is partly concerned about slower growth and inflation risks, folks. Another word for that is stagflation. This is something we have talked about a lot the last week or so. And then finally, Fed President Goolsbee says the 2018, yes, the 2018 tariffs that went into effect did not have a material impact on national inflation. Again, folks, there's a lot of stuff going on today. We will give you a view of the port that we are in. Let me know in the comments below, what port do you think we are in? I will give you a flash of the skyline. Let me know, what port do you think we are in? Leave comments below, and we will talk to you tomorrow. Bye.